Hi guys, well, it's that night again, budget night, and for anyone that's been watching at home for the last maybe 4 or so years, I've normally done a budget live with some special guests. We've had Pete Wargent, Jeremy Iannuzzelli and Cate Bakos covering off things business, economics and what it means for property as well. So whilst I'm overseas after doing a charity bike ride in Thailand, I'm unable to do a live event for budget night, but what will actually happen is I'll have these experts pour over the detail and give you a video of their thoughts after the budget, which is about to happen right now, and hopefully we'll get this out to you very soon. An interesting one in the lead up to the federal election. It's going to be a real battle between Labor and Liberal this year, and we'll be able to unpack all of that for you in the next little while.
I move that the bill be now read a second time, and I acknowledge the Ngunnawal people here and the Yuggera and the Yugambeh back home. Speaker, this budget builds on the progress that we have made together. It's a plan to help with the cost of living, with 2 new tax cuts and higher wages, more bulk billing and more help with electricity bills, cheaper medicine and less student debt. It's a plan to build Australia's future, with more homes, new investments in skills and education, competition reforms and a future made in Australia. Yeah. Speaker, our economy is turning the corner. Inflation is down, incomes are rising, unemployment is low, interest rates are coming down, debt is down, and growth is picking up momentum. On all of these fronts, our economy and our budget are in better shape than they were 3 years ago. Yeah. Now, this progress has been exceptional but not accidental. The credit belongs to Australians in every corner of our country. We've come a long way together, but there is more work to do. This budget is our plan for a new generation of prosperity in a new world of uncertainty. It's a plan to help finish the fight against inflation, rebuild living standards and maximise our national advantages into the future. This is a responsible budget with 5 main priorities: helping with the cost of living, strengthening Medicare, building more homes, investing in every stage of education, and making our economy stronger, more productive and more resilient. Speaker, the global economy is volatile and unpredictable. The 2020s have already seen a global pandemic, global inflation and now the threat of a global trade war. The whole world has changed as a consequence. Tariffs and tensions abroad have been accompanied by storms here at home. Ex-tropical cyclone Alfred could wipe 0.25 percentage point off quarterly growth. North and far north Queensland have flooded too. Storm clouds are gathering in the global economy as well. Trade disruptions are rising. China's growth is slowing. War is still raging in Europe and a ceasefire in the Middle East is breaking down. Treasury expects the global economy to grow 3.25% for the next 3 years, its slowest since the 1990s. It's already forecasting the 2 biggest economies in the world will slow next year, with risks weighing more heavily on both. Australia is neither uniquely impacted nor immune from these pressures, but we are among the best placed to navigate them. We're emerging from this spike in global inflation in better shape than almost any other advanced economy. Growth is forecast to pick up from 1.5% this year to 2.5% in 2026-27. The private sector is resuming its rightful place as the main driver of this growth, with Treasury upgrading forecasts for growth in private demand to more than double next year compared to this one. Unemployment is now projected to peak lower at 4.25%. Employment and real wage growth this year will be stronger and participation will stay near its record high for longer. Inflation is coming down faster as well. Treasury now expects inflation to be sustainably back in the band 6 months earlier than anticipated. Yeah. Now, all of this means that the soft landing that we have been planning for and preparing for is now looking more and more likely. Because of our collective efforts, the worst is behind us and the economy is now heading in the right direction. But there's more work to do because we know that people are still under pressure. The cost of living is front of mind for most Australians, and it is front and centre in this budget. We know the welcome improvements in the aggregate numbers don't always immediately translate to how people are feeling and faring. We've made a lot of progress together, but we know that many people are still doing it tough. Our plan to rebuild living standards starts with cost of living help and wages growth. It includes more hip pocket help for households, 2 new tax cuts for every taxpayer, more energy bill relief, increasing wages and reforming non-compete clauses, more bulk billing and cheaper medicines, student debt relief, and a fair go for families at the checkout and for farmers at the farm gate. Speaker, tonight the government is proud to be delivering more tax relief. Every Australian taxpayer will get a tax cut next year and the year after to top up the tax cuts which began in July. This will take the first tax rate down to its lowest level in more than half a century. These additional tax cuts are modest, but they will make a difference. The average earner will have an extra $536 in their pocket each year when they're fully implemented. Combined with our first round of tax cuts, this is $2,190, and the average total tax cut will be $2,548, or about $50 a week. We will also increase the Medicare levy low-income thresholds, which is extra tax relief for more than 1 million Australians. Now, our $17 billion in tax cuts are the biggest part of the responsible cost of living package in this budget, but they're not the only part. Mr Speaker, electricity prices in the official data went down 25% last year, but they're still putting pressure on households around the world. 2 rounds of energy rebates have helped take some of the sting out of energy costs. Tonight we're providing another $1.8 billion in energy bill relief. Every household and around 1 million small businesses will receive energy rebates until the end of 2025. This means cutting another $150 off bills this year. The government will also be using the powers and penalties of the energy regulators and the ACCC to help ensure that energy companies offer customers cheaper deals, that pensioners receive the discounts that they are entitled to, and that Australians get the value that they deserve. Mr Speaker, at the core of our economic plan and at the very heart of this Labor government is a simple objective: to ensure more Australians earn more and keep more of what they earn. In the 5 quarters before our first budget, real wages fell in annual terms. They have now grown for the last 5. Real incomes per capita are now growing too. This is the dividend of our economic plan to get inflation down and wages up and tax cuts flowing. Tonight we're providing an additional $2.6 billion to fund pay rises for aged care nurses from March this year, so that the workers that we trust to care for our parents and grandparents get paid properly for the work that they do. We're reforming non-compete clauses to lift wages by up to $2,500 a year for workers covered by them. We've supported an historic wage increase for the early childhood educators and care workforce, and we've backed pay rises which ensure the national minimum wage has risen by almost $7,500 a year. Speaker, we know that Australians, despite all of this, are still under pressure, and a lot of that pressure is felt at the checkout. That's why we're cracking down on the supermarkets, by empowering the competition watchdog, making the food and grocery code mandatory, increasing penalties and boosting competition. At the same time, we're targeting excessive surcharging and scams and unfair trading practices that harm consumers. Speaker, a university education is a life-changing opportunity, but it shouldn't leave Australians with a lifetime of debt. This year we will cut 20% of all student loan debts, raise the minimum repayment threshold and reduce repayment rates. Combined with our existing student debt relief, we will slash $19 billion in debt for more than 3 million Australians. Speaker, in every budget, including this one, we have made medicines cheaper. Tonight we reduced the maximum price for a PBS script from $31.60 to $25. And pensioners and concession card holders will still pay $7.70 a script because we froze their costs as well. We're also investing $1.8 billion to list more life-changing and life-saving medicines on the PBS. For example, cutting the cost of a lymphoma treatment will save some Australians more than $600,000. Speaker, the Pharmaceutical Benefits Scheme is a great Labor creation and it's a great Australian institution. And we are strengthening it because Australians need us to, not weakening it because American multinationals want us to. A Labor government created Medicare as well, and only Labor governments strengthen it. Tonight we are proud to make the single biggest commitment to Medicare since its creation. A record $8.5 billion to lift bulk billing rates and build our health workforce. Because of this investment, 9 out of 10 GP visits should be fully bulk billed by the end of the decade. More bulk billing will mean less pressure on families. These incentives mean there will be around 4,800 fully bulk billing practices around the country, making it easier to see a doctor and get the care that you need, and saving patients around $860 million a year. This budget also delivers new incentives for doctors to train as GPs, new scholarships for nurses and midwives, and another 50 Medicare urgent care clinics. This is a $644 million investment in this budget to build on the 87 urgent care clinics that we've already opened. 4 in every 5 Australians will live within a 20-minute drive of an urgent care clinic as a consequence. Opening early, closing late, available on weekends, taking pressure off hospitals and emergency departments, and all you need is your Medicare card. Every single state and territory will also get more money for hospitals in this budget, funding that will reduce waiting times. Tonight we're locking in an extra $1.8 billion, taking our total contribution to public hospitals to $33.9 billion next year. Speaker, we're proud to be investing $793 million in this budget in women's health to create more choices and lower costs and deliver better health care for women. This funding will help Australian women save on contraception, access more endometriosis and pelvic pain clinics, and receive better support through menopause. Because for our government, women's health is not a boutique issue or a question of special interest, it is a national priority. Speaker, new plans for cost of living and health are accompanied by new investments in housing. We are tackling the housing shortage from every responsible angle, making home ownership more affordable for young Australians and for young families in particular. Our $33 billion plan will help build 1.2 million new homes before the decade is out. This includes $54 million to accelerate the uptake of modern methods of housing construction, which is all about building more homes more quickly. It supports our work to cut red tape and reduce financial barriers to more efficient construction methods. The first 2 rounds of the $10 billion Housing Australia Future Fund are helping to build about 18,000 social and affordable homes for those who need them most. And lifting the cap on Housing Australia's financial liabilities to $26 billion also helps in this regard. We're making sure new properties are well located and connected to the infrastructure that they require. Our housing support program is funding the crucial roads, water and power that these new homes need. Our national leadership is incentivising states and territories to reform their planning systems to accelerate new housing supply. And to build more, we know that we also need to train more builders. That's why we're attracting more apprentices into the housing industry by doubling incentive payments so that eligible apprentices get up to $10,000 if they train up in the housing construction sector. Speaker, tonight we're expanding our Help to Buy scheme as well. This is part of our efforts to help ensure more Australians can buy a place of their own. We will update the property price and income caps so more first home buyers are eligible for the scheme. And this will help 40,000 Australians buy their first home in the next 4 years. And the changes mean that they can access a bigger range of homes and buy one that suits them. And we're easing pressure on the housing market by banning foreign investors from buying established homes and cracking down on foreign land banking as well. Speaker, a crucial part of this Labor government's economic plan relies on the transformational power of education, its power to turn aspiration and ambition into reality. And this is why we're investing in every stage of education, to lay the foundation for a better and fairer system and teach and train Australians for the jobs of the future. Speaker, this all starts with early childhood education and care. We believe every child has the right to an early education to ensure that they don't start school behind. Cheaper childcare is also cost of living relief with an economic dividend. A key part of our plan to rebuild living standards is to help people work more and earn more if they want to. That means breaking down the barriers to workforce participation. So from January 2026, we are replacing the childcare subsidy activity test with a new 3-day guarantee. This will make sure families are entitled to at least 3 days a week of subsidised early childhood education and care. We're also building more childcare centres in areas of need, investing $5 billion to expand access across the country and lift the wages of early educators, and charting a path to universal early education and care regardless of a child's background or no matter where they live. Speaker, we're also putting billions into public schools in this budget to open the doors of opportunity for more Australian children. We're fully and fairly funding public schools to help students catch up, keep up and finish school. This means public schools will finally be on track to reach the funding standard recommended in the Gonski Review almost 15 years ago. On top of this, our fee-free TAFE program will help equip Australians for the jobs of the future. Over the next decade, 9 out of 10 new jobs will require post-secondary qualifications. Almost half of these will be from vocational training. We've introduced legislation to lock in 100,000 free TAFE places annually from 2027, and we've committed $1.6 billion to fund these places until 2035 to make it easier for Australians to train, retrain and upskill. Speaker, we see this as an important way, or one way, to ensure Australians can be primary beneficiaries of all of this churn and change that we're seeing around the world. Another is by investing in our comparative advantages, or by looking for opportunities to join with our partners in new, more resilient global supply chains, by becoming an indispensable part of the global net zero economy, by preparing our people to adjust to and succeed in the new world being created right in front of us, by building a future made in Australia. Now, a big part of this depends on boosting productivity the right way to lift living standards over the long term. Now, our plan for productivity growth doesn't mean making Australians work longer for less. It's about investing in our people and doing more to unlock our potential by boosting dynamism and competition in our economy. We've created a $900 million fund to reward state governments for implementing reforms that promote competition. And tonight we are advancing this substantial economic reform agenda. We will abolish non-compete clauses for most Australian workers. Non-competes are holding too many Australians back from switching to better, higher-paying jobs. More than 3 million Australians are captured by these clauses, including childcare workers, construction workers and hairdressers. People shouldn't need to hire a lawyer to take the next step in their career, or permission from their old boss if they want to be their own boss and turn an idea into a small business. The Productivity Commission estimates that this reform could lift productivity, reduce inflation and improve GDP by $5 billion. And it could boost wages by up to 4%. We're also introducing a national licensing scheme to allow electricians to work seamlessly across borders. This will be a template for expanding national licensing to other occupations when and where we can. The PC suggests that these broader licensing reforms could boost GDP by up to $10.3 billion. Mr Speaker, Australia is well placed to respond to the 5 seismic challenges shaping this new world of uncertainty. The shift from globalisation to fragmentation, from hydrocarbons to renewables, from information technology to AI, from a younger population to an older one, and all of the changes in our industrial base. Now, all of this puts a premium on resilience, and that's what a future made in Australia is all about. In this budget, we're investing more than $3 billion to support the production of Australian-made green metals like aluminium and iron, building on the tax incentives for critical minerals and green hydrogen that we legislated last year. We're also backing clean technologies through our Future Made in Australia Innovation Fund and by recapitalising the Clean Energy Finance Corporation. This will help develop new industries in clean energy manufacturing, green metals and low-carbon liquid fuels, and unlock more private investment. This agenda is about recognising that our future growth prospects lie at the intersection of our industrial, resources, skills and energy bases and our attractiveness as an investment destination, so that we can grasp the jobs and opportunities of the net zero transformation. Speaker, in difficult conditions, around 25,000 new businesses have been created each month on average since we came to office. Now, we respect and admire the hard work and aspiration and sacrifice behind those record numbers, which is why we're going into bat for small and local businesses in this budget, protecting them from unfair trading practices, funding our Buy Australian campaign to support local producers, providing new resources for the regulator to level the playing field for smaller players, and delivering tax relief for hospitality venues, brewers, distillers and wine producers as well. Speaker, building Australia's future also means building on the strength of our regions. That's why we're securing banking services in country towns and flights in the bush. It's also why we're investing up to $3 billion in additional equity to complete the rollout of the national broadband network. Infrastructure like the NBN is essential for communities and students and businesses and to the productivity of our nation. And so are the roads and railways connecting our regions to our cities and supporting economic growth. This budget provides $17.1 billion over 10 years for these projects, including $7.2 billion to upgrade the Bruce Highway in Queensland, the biggest ever investment in the Bruce, $2.3 billion for Western Sydney, with $1 billion of that for the rail network alone, and $2 billion towards transforming Sunshine Station, taking our Melbourne Airport rail investments to $7 billion. In total, we're investing more than $120 billion in infrastructure in every state and territory over the decade, improving the productivity, resilience, livability and sustainability of our cities, regions and communities, accompanied by $262 million to preserve and conserve our natural land and our ocean assets. Speaker, in these uncertain times, economic security and national security are increasingly intertwined. We're supporting stability and prosperity in our region by helping to shore up banking services in the Pacific. We've invested an extra $50 billion in defence by the mid-2030s to help keep Australians safe. It means defence funding will grow beyond 2.3% of GDP by the early 2030s. And we're investing $45 million in our initial response to the independent intelligence review. So, Mr Speaker, in a tight budget, we've made room to boost our defences, strengthen Medicare, help people doing it tough, build more homes and invest in the future. We've done all of this at the same time as we've overseen the biggest ever fiscal improvement in a single term of government. Tonight's budget is $207 billion better than we inherited. It's in better shape in every year over the forward estimates than it was 3 years ago. In our first 2 years, we posted the first back-to-back surpluses in nearly 2 decades. Our deficit this year has almost halved since we came to office. Next year's deficit is $42 billion, lower than what was forecast at the last election and lower than at the mid-year update. Gross debt will hit $940 billion this financial year, $177 billion lower than what we inherited. Yeah. This means we'll avoid around $60 billion in interest costs over the decade. These are some of the dividends of our responsible economic management, achieved through a combination of spending restraint, finding savings and banking revenue upgrades. Real payments growth is forecast to average 1.7% to 28-29, less than half of the average under our predecessors. We've found around $94 billion of savings since coming to government, including another $2 billion in this budget. In this term, we've banked around 70% of tax receipt upgrades, and we've made structural improvements to the budget across the NDIS, aged care and interest costs as well. And Speaker, we're repairing the budget without ignoring our responsibility to build a stronger, fairer and more inclusive society, where more Australians have the chance to contribute and share in our economic success. We're providing $1.3 billion for closing the gap and economic self-determination for First Nations Australians, with investments in remote community services, opportunities for business and support for home ownership. Tonight's budget also includes $424 million for Australians with a disability and more funding for aged care reform. There's more money to support veterans and build on the progress that we have made eliminating that backlog of claims. Yeah. And we're providing help to Australians and communities affected by natural disasters, provisioning another $1.2 billion to properly fund recovery from ex-tropical cyclone Alfred, as part of $13.5 billion in natural disaster funding for further north and right around the country. So, Mr. Speaker, it's even more important and even more remarkable that Australia's economy is turning the corner when we know that the global economy is taking a turn for the worse. Our progress and our prospects validate and vindicate the decisions and the sacrifices that we've made together as Australians to bring inflation and debt down, to get wages and growth up, and to keep unemployment low. And what really matters is that we build on this platform, how we help finish the fight against inflation, how we keep rebuilding living standards, and how we maximise our national advantages to benefit Middle Australia. The plan at the core of this budget is about more than putting the worst behind us. It's about seizing the best of what's ahead of us, to build a stronger economy together and to build a future that we can all be proud of. And that's why I commend this bill and this budget to the House.
Wow, a lot to unpack in that budget, and a little bit more interesting than we've seen in the previous years. Probably the biggest standing ovation I've ever seen a treasurer get. But before I go to my experts, Pete, Jeremy and Cate, talking about property, business and the economy, quick takeaway from me. The treasurer said in the first quarter of their 1.2 million construction target in 5 years, they achieved 45,000 or nearly 45,000. Now, I'm not a maths genius, but 1.2 million homes over 5 years is 240,000, and 45 times 4 is going to put us 60,000 behind the target in the first year. So there's a few issues around that, and I'll follow up at the back end with some more construction things. But let's see what Jeremy's take on the budget was.
Thank you again, Mike, for allowing me to be a participant in our annual budget wrap up. And I have to say, I've always held Jim Chalmers in very high regard. I thought he's done very well in his prior two budgets, bringing Australia into a surplus position on the back of a very strong mining boom and also a very strong income that he was receiving from the receipts and royalties that he was gaining from a lot of export that he had with around the world and China, especially with our raw materials. He did mention that it was definitely going to slow down, but I really feel that they've underestimated the actual slowdown that's happened. And I'm going to go and just say some comments. I really felt they actually underestimated the American election, and they didn't anticipate Donald Trump would get in and further anticipate the level of tariffs that's been imposed on a lot of nations around the world. And one of the things I would like to mention, I'll let Pete and Cate talk about the economy in general and also the property economy space as well. But to see that they're considering or thinking about inflation going up from about 2.5 to 3% in the next financial year tells me that they do believe that there's going to be tariffs on Australia from America, and that's going to result in higher payments that people are going to make and probably mismanagement of policy between two countries. So definitely something to consider and keep an eye on. They're saying that there will be an uptick in inflation, and with that uptick in inflation, we'll start to see some higher prices, especially at the FPOS machine or at the cash register for goods and services and other things alike, linked to American economies and potentially other economies as well. But my side of things, it was a bit of a left field, not anticipated tax cut. I didn't think it would happen, but what they have done is drop the taxes for low income earners below 45k, roughly by about 1% in FY26 and a further 1% in FY27. It's going to give you roughly about $5 in your pocket per week. So roughly the cost of a cup of coffee, a small one. Don't dust it with any chocolate. Probably just skip the equal as well, but you're going to be receiving about $5 extra in your pocket for those low income earners. So a little bit of reprieve, but not enough to make or change the dial. One of the big things I did see was 20% off student debt. They're going to be slashing that. So another bit of spending that may not necessarily impact or improve the economy's position straight away, but potentially you'll start to see those dividends in the long run. All in all, I thought it was, to be fair, a big spending budget considering the less receipts we've received from selling our raw materials and minerals over the last 12 months. I thought it'd actually be a little bit more conservative, but hey, it's a pre-budget election. They're there to get votes. They've probably got the better space of a couple of months prior to going to the polls, and they've got to give something for people to talk about. A couple other things I noticed, there's a bit more increase to Medicare levy budget, which is good. I think it's been neglected through the rise of NDIS. It's all about being funding the NDIS budget, that ever-growing budget that it needs to be able to serve its participants well. But it's good to see that a lot of people are going to be receiving some benefits in the framework of additional GP visits under the bulk billing system. So I think that's really good. It's going to give people a lot of reprieve and also assist, I suppose, in the costs and where people's money are going. But a lot of other policies that they've implemented, there's some fluff in there, and a Labor budget wouldn't be a Labor budget without some fluff. But there's definitely some things in there which are probably not going to improve productivity, not going to assist in increasing the GDP. But one of the big things I did see, and Cate, I know you'll talk a little bit about it more because it may impact your industry more than mine, but I did see that the restriction clause or non-compete clauses that's probably been in a lot of people's employment contract for people earning less than $175,000 will be abolished. Essentially meaning people that can actually leave their job and go start their own business with no issues if they were in a position, from what I could read, earning lower than 175k. So that's supposed to increase GDP. It's going to increase the ability to people earn more money and not be restricted by former employers or former restrictions of contracts. So some positive things in there, probably a step in the right direction, to be fair. I did not see that coming in the budget. More of that stuff happens in the House of Reps and Senate committees, but nevertheless it has happened in the budget, so it's good to see some forward thinking, which may help productivity, help competition, increase income, and also increase the ability to provide more services to more people. One of the big things there I did see is that migration will continue to uptick year on year, which is probably not necessarily a bad thing. It's a great way to increase or artificially increase our GDP. because hey, if we're not selling raw materials overseas, then let's bring the money in via importing more people, and hopefully they bring with them more wealth. But from an accountant point of view, not a huge tax cut. We're not talking about the stage 2, stage 3 tax cuts that Liberal brought in all those years ago, but definitely left field. Did not see the Labor government coming in with a 1% tax rate cut for income earners less than 45k, and a further 1% in 2027. Your middle income earners, the people that probably really do need the most level of benefit, those people earning between about 45k and 200k, you got nothing. They're still talking about the cumulative tax cuts and benefits you received as part of the stage 3. And as we all know, the stage 3 tax cuts was abysmal, taken away by the Labor government on the back of a Liberal promise in enhancing the economy, enhancing what went into your back pocket. But at that stage, it was deemed as reckless and not right for the economy, and it wasn't factored into potentially a deficit or surplus. What was interesting to see, though, was there was a lot of comments about the mismanagement of the budget, and I think Chalmers delivered a deficit of roughly about $30 billion, and then moving forward up to about 42, and then sliding back down to around about 25 to 30 billion. I think those numbers are grossly underestimated. I think there is more headwinds to come, especially between trade tensions with the US and further an economic slowdown in mainland China. So I do believe that those numbers are very underdone. I expect our budget deficits to actually increase far more than what they're forecasting in the years ahead. And where has economic policy gone, right? We're looking at budget deficits pretty much all the way through to 2035 before they anticipate a surplus. If I was running a business and I was running at a loss for 10 years, forecasting a profit after 10 years, I'd kind of turn around and say you're delusional, because you really can't look more than about 3 to 5 years ahead. Anything beyond that is a guess. So putting my accounting hat on, my business hat on, I think it's definitely a gimmick there. Again, we've got a pre-election budget that was just done. So why not throw some numbers in there? We've just got to get to the next election and win it, and give ourselves, a few more years in government and in power. So it'll be very interesting to see what a lot of commentators discuss. I think for the first time, Jim Chalmers has probably handed down what I would see is a little bit more of a reckless budget than I anticipated. When he did have the money there in the last couple of years, I felt that he maybe could have went a little bit harder and threw a little bit more cash around, but he threw the card out as being a responsible treasurer. But now is the time to be responsible, and I think he's given just some tokens there, some gesture of goodwill movements that really not tangible, and you're not going to see a massive difference. $5, although it's $5, it doesn't really go a long way, especially when your cup of coffee might be more. So things to consider: lower tax rates, increase of the Medicare levy threshold from 26,000 to 27 by memory, which gives everyone a little bit, especially if you're a low income earner, a little bit of benefit. You're not having to pay that 2% Medicare levy too soon. You are having to earn more money before you do get slapped with that 2%. So a couple little things there, but all in all, I'm going to say that was a reckless budget from a spending perspective. I've always sat on the fence, and Pete and Cate will probably contest that I've probably been too diplomatic in my approaches to reviewing the last two budgets. But this one, I'm not going to sit on the fence. I'm going to get off it. And I'm going to take a stance and say that I thought that that was a budget where I think the dollars could have been spent in a better area, better direction. The takings, the royalties that we're receiving overseas are lower, and I think, again, underestimated how low they will go. One thing you did notice was there is some turbulent winds, turbulent economies around us, with wars in Europe and wars in the Middle East and trade tensions as well. So I think those will factor in the time to come. We'll see what happens in hopefully the next 2 or 3 months when an election gets called. We'll see what Peter Dutton's response is as well. He might agree, and I think he probably will agree with a number of the budget measures, but who knows, he might throw a couple curveballs in just as part of his election commitment, put more money in pockets. Why not? Everyone loves it. But is this the budget? Is this the economy? Is this the coffers that we have to be able to throw money around? This could be a time where we could be talking about that 90s recession, that slowdown approach, and that's what they're anticipating as part of the GDP growth, a very slow movement upwards, nothing backbreaking, nothing, throwing the roofs of the houses off essentially. But uptick in inflation next year, slightly coming down, and GDP very slow and steady, to the point where one would argue, given history, that we're probably going to see GDP flatline, as it has been for this calendar year so far, I believe sitting at around about 1.5%, hence the reason why inflation has come down. So see what happens. We'll see what the response is from Mr. Dutton. I'm sure there'll be one, and it has to be spectacular, because Liberal at the moment, or the coalition at the moment, aren't doing too well in the polls. So see what happens. I think there'll be lots of debates to go on, and I think there's a couple more sittings prior to the election. But that is my budget wrap up, and hope to see you all again next year. There'll be lots of notes, so don't forget to read through them, and a lot more unpacking that you can do.
Well, extremely insightful stuff from Jeremy as always. Let's go to Kate with her download on what the implications of this budget are for property.
Well, that was an interesting budget night. We had quite a few things there. There's certainly a lot in the health sector as well, but I'm talking primarily about what's going to impact the property market. And the headline at the start, Treasury expects inflation to be back in the band 6 months earlier. Of course, we've all been looking very carefully at where inflation's going, but I would suggest that in this current environment that we're in, that isn't something that I think they could hang their hats on. We've got a lot going on globally, and inflation, in my opinion, is a bit uncertain over the coming year. Just circling in on one of the aspects that was spoken about in relation to healthcare, urgent care clinics, and they're claiming that 4 in 5 Aussies will live within 20 minutes of an urgent care clinic. And how this might relate to the property industry is actually for those who are looking for clinic sites, so commercial sites and medical sites where you've got doctors banding together trying to find sites. I've worked with doctors before, and they're not easy sites to find, and there'll be competition there now with these urgent care clinics being launched. So that's probably a space to watch in the commercial sector. And I noted that in terms of first home buyers, our government has really hung their hats on the shared equity schemes. And so unlike previous years where we've had other incentives, there's a little bit there about new home boosts, but they talked a lot about the shared equity scheme, and in particular how they're looking at increasing the number of places, increasing the caps, and also increasing the threshold so that more first home buyers can participate in the shared equity scheme. We have social and affordable homes. That was a large part of the discussion in the speech tonight, and pretty much talking about how they're on track with the housing accord. They've got they're incentivising states and territories to support increasing housing, and they're also talking about banning foreign investors from buying established homes and land banking for foreign investors. And while this sounds very harsh, it's a 2-year ban, and they'll assess it towards the end of that. Obviously, they're looking at preserving as much opportunity for Australians to have a home as they possibly can. But we've had Foreign Investment Review Board processes in place for decades now. It looks like they've increased the scrutiny even further, and it's a total ban. That will be an interesting one to see how it plays out in the news as well. $9.3 billion to states and territories to combat homelessness, provide crisis support, maintain and repair social housing. That's a significant spend, $9.3 billion. And also includes doubling of the funding for homelessness services to around $400 million a year. Obviously, in the scheme of things, $400 million is a much smaller amount, but the budget also provides $6.2 million for homelessness research, advocacy and coordination. So a real feature there in the budget speech. We've also got $1 billion provided to the National Housing Infrastructure Facility, being used to support crisis and transitional accommodation for women and children experiencing domestic violence and for youth experiencing or at risk of homelessness. We've lastly boosting construction workforce, and there's a mention there which we've heard of before, where eligible apprentices in housing construction occupations could receive up to $10,000 in financial incentives over the course of their apprenticeship. I would argue that over an apprenticeship, that's that's not a massive figure. And of course, if young people are chasing a dollar, they won't necessarily look at that as a great deal. So I'm not sure how much that will influence things in terms of freeing up construction and having more workers. Anyway, it was a significantly different budget to the last one that Chalmers gave us. Quite a lot of expenditure and tax cuts there, and I suspect that there'll be a bit of scrutiny around the spending. It'll be interesting to see what comes out in the next 24 hours.
Yes, some interesting thoughts there from Kate. Good to see we're seeing increases in the threshold for the Help to Buy schemes and trying to get the states on the same page with some of the rental legislation as well.
Hi, Pete Wargent here from Wargent Property Buyers. So we've just finished the budget announcement from Jim Chalmers. I've just made a few bullet point notes here as we went through. So this is just a flash or initial reaction from me. So I guess the general theme or the vibe was that the Aussie economy is turning the corner. It's been a difficult few years, of course. I think though, if you look ahead for the next decade, we've got basically a decade of deficits ahead. And in fact, if you include a lot of the off-balance sheet spending, we're things looking a little bit ugly, and we're going to see debt increasing over the remainder of the decade. The good news is that the private sector is expected to drive growth going forward. A lot of the economy has been propped up by government spending and public demand in recent times, but by next year, GDP is expected to be 2.5% driven by the private sector. Inflation expected to get back in the middle of the target band by the middle of this year, which is good news. And tax cuts in 2026 and 2027 will be very welcome news for most households. I think this was leaked earlier in the week. We will get some energy bill relief, so that's a renewal of, this will be the third go. They'll have its electricity rebate, so another $150 for each household. That does have a bit of an impact. Of course, it brings down headline inflation mechanically, but it also helps to reduce inflation expectations. And of course, a lot of things in the economy are actually benchmarked against headline inflation anyway. So even though it's a bit of a fudge, it does actually help to just bring inflation back down to that manageable target level. For housing, expanding the Help to Buy scheme, it's been a bit of a nothing burger so far, but over the next 4 years, about it'll be 40,000 first home buyers can access the scheme. So they've increased the thresholds, the price thresholds there. So 10,000 a year is not huge, but it's a bit of demand side measures for housing. Student debt relief, I think this has been talked about prior to the budget announcements anyway. So yes, the government debt is going to increase moderately over the rest of the decade. For housing as well, banning foreign buyers of established properties for 2 years. Again, it's a bit of a nothing announcement because by and large, non-residents or foreign investors don't actually buy much established property. But it's a populist move, I suppose. Housing Australian Future Fund, there was another announcement on that. They're still talking about the 1.2 million homes in 5 years. I think in the last quarter we built about 45,000 dwellings. So we're way off track, and I think realistically that's a bit of a pipe dream. There was a small amount of funding made available for faster and more efficient or productive construction techniques. Again, real chum change in the grand scheme of things, 54 million. A couple of other things stood out just from the economic outlook. Migration or net overseas migration, aka immigration, is projected to fall from 435,000 this year to around 225,000 by 2027. Again, it's a fairly heroic assumption based on what's gone before, and I wouldn't be at all surprised if immigration continues to track at a much higher level than that. And also some pretty heroic assumptions in there for dwelling investment, i.e. housing construction, expected to go up and up and up over the years ahead, with 7.5% projected in 2027. Look, maybe that's when we get the peak of the apartment construction boom, and maybe that's does come to pass. But Yeah, those were just some first takeaways. I think overall there was nothing there that was completely unexpected, nothing to spook the horses. And I guess the government will be calling the federal election in due course in the next day or two. So we'll have to see whether it's enough to get the incumbent government across the line. The polls have certainly shifted in that direction in recent weeks. And overall, it was a pretty well delivered budget by the Treasurer, Jim Chalmers, and pretty well received in Parliament House. So I'll leave it there. If you've got any questions for me, you can always catch me, Pete Wargent, on my daily blog. It's petewargentblogspot.com, and always happy to have a chat. So thanks very much, and see you next time. Cheers.
All right, well, a lot in that, especially looking at 10 years of future deficits. For me, I suppose some of the big takeaways were the construction side of things, which is really the area that I focus in, and $10,000 for trade apprentices over the course of their, let's say, 3 or 4 year apprenticeship is not a huge amount of money, and we do desperately need more trades. Announcing $54 million to accelerate the uptake or remove the barriers to modern construction techniques is a very paltry sum. And I would say that whilst modern construction techniques and modular construction can help us get out of the problem that we're in, a much bigger problem is the taxes that are imposed on the construction of new dwellings, and of course the planning. So it'd be interesting to see what comes of the national planning blueprint. But that's it for another year. We can expect the election to be called in the next little while, but I just want to say thank you to Pete, Jeremy and Cate for sharing their wisdom with us, and we'll be watching, and we'll be back, of course, for any future updates. Well, that's it for another year. There's some really positive things in the social and welfare space and health, of course, but we typically will focus more on the property when we're doing this sort of wrap up. You know, another 10,000 spots a year for first home buyers is not big. When we're talking about stopping foreign investors from buying established properties, there's really not a big demand for established properties from foreign investors, but I'm guessing that will be quite popular with the electorate. We're continuing to talk about building those 1.2 million homes. I've said over and over again, we're well behind target. It's unlikely to happen. The investment in new construction methodologies is a very, very small sum, and I think the bigger problem is apprenticeships and getting trades on board. Of course, we've got some new initiatives, some incentives to hire apprentices and some cash bonuses for apprentices as well, although fairly minor. But the big one for me is the planning. So the National Planning Authority looking at the red tape and hopefully the taxes that are an impediment to new housing supply. And as Peter and Jeremy have mentioned, the 10 years of deficits we've got to look forward to is an interesting one to see how that will play out. But of course, tax cuts for 2026 will be welcome, and as Cate pointed out, some rent assistance which is welcome for renters. So not a huge amount in it for property and property investors. I think some positive things, but we've still got a long way to go when it comes to the supply side of things. And we've seen a little bit of a jump in the demand with some of these government help to buy initiatives. But it'll be interesting to see when the election is called. It should happen very, very soon. And the polls are saying it's going to be a difficult election to win for Labor. So all of this could be moot, but we will see. Anyway, thank you for tuning in.